In today's video, we want to chat to you guys about double taxation agreements, and I'm really privileged today to be speaking to one of the guys at Tax Consulting South Africa, Delano, and he's going to guide us a little bit through the process and answer some of the questions that a lot of people out there have about double taxation agreements. So, Delano, do you maybe just want to introduce yourself quickly to the viewers and just say who you are, what it is that you do there at Tax Consulting South Africa?
Thank you so much, Heinrich. Always a pleasure to have opportunities like this. So the name is Delano Abdul. I'm working at Tax Consulting South Africa in the Johannesburg branch. I'm one of the legal managers, and I focus on individual cross-border taxation. Admitted attorney, have a passion for the law, and when it comes to tax, really enjoy the complex things.
Yeah, lovely. I think maybe this is a starting point. Obviously we said we're going to be talking about double taxation agreements today. I think most people, ordinary taxpayers, they have never even heard about the term. Do you maybe want to explain to us and maybe unpack it a little bit and just so people know what a double taxation agreement is?
Sure. So it's not everyone who would have a situation in life where they need to consider a double taxation agreement. But those who do find themselves cross-border or outside of South Africa, a double taxation agreement is a bilateral agreement between two contracting states. And of importance in our landscape would be those that are concluded with South Africa. So it's a treaty that deals with a variety of things related to tax. And the most important thing under a DTA process is that it deals with the allocation of taxing rights. And when you look at that, you often find that individuals find themselves in these cross-border countries that have treaties with South Africa. And one of the questions that arise is, how do I avoid double taxation if it applies? And the way you would do that is to utilize this thing that's called a double taxation agreement.
So I think that's probably my next question. I think you answered some of it, is where does that fit into, if I decide that I'm going to cease tax reasons, I'm out of here, I want to leave, or how does that fit into the picture? When would I start considering those type of things?
So one of the starting points in order to know where DTA fits in is to understand, how do you know if you're a tax resident in South Africa? So South Africa's taxation system being residence-based, our legislation, the Income Tax Act, has a very specific definition of what a resident is. And when you look at that definition, it actually boils down to three tests per se. The first is the so-called ordinarily resident test. The second is the so-called physical presence test. And the third, I like to refer to as the override test, because it's a proviso in that definition that even where one is ordinarily resident, which relates to most South African expats who are outbound expats, that double taxation agreement that's in place may override that status and hence make you exclusively resident of a host country, which in turn leaves you to be a non-tax resident in South Africa. So that SARS can only tax income sourced within the borders of South Africa.
Yeah, I think if you unpack it like that, I think there's a big benefit, because I think that's one of the big worries of a lot of people that's going to work overseas at the moment, is, just the whole thing that they're looking at tax outside plus South Africa. So I think if you can fall into that net of DTAs, I think there's a big benefit of that. Yeah, so I think the next question that I want to ask quickly is just the receiver of revenue. Do they actually recognize DTAs for non-residents?
So SARS certainly does recognize DTAs. So we know on their website, they have a specific page dedicated to how does one cease to be a tax resident. And the big distinction, as I've touched on, is that if you are a tax resident in South Africa, albeit that you might be abroad or in a different country, SARS gets to tax worldwide income. And it usually leaves an expat in a situation to ask, how is it that I am taxed still in South Africa, although I'm receiving this remuneration or sourced income outside of the country? And if you're a non-tax resident in South Africa, you have to achieve the status through a formal process with SARS. So the obligation rests on the taxpayer to update their status from tax resident to non-tax resident. And you can do that in one of three ways. One, you can cease to be ordinarily resident. Two, you can cease your status through the physical presence test. It has a proviso. But importantly, you can also cease your residency due to the application of a double taxation agreement. And SARS recognizes that when it asks a taxpayer to actually sign a declaration form to indicate the basis upon which they qualify to be a non-resident.
That's good. So if I'm heading out of the country now, what documents does SARS require for me to follow the DTA process? Is there a list of documents that I have to have in place for them to consider my application?
Certainly. So the big misnomer is that there's only one document, and that's a tax residency certificate from the Foreign Revenue Authority. A taxpayer must recognize that document alone is not sufficient to imply that a DTA finds application. The four main documents SARS will request is the signed declaration form, where you've indicated you cease to be a tax resident due to the application of a double taxation agreement. The second document will be your letter of motivation, and that needs to set out your facts and circumstances in detail, and it's actually applied against the so-called tiebreaker test provisions of a DTA. The third document is copies of your passport stamps and travel diary. In some jurisdictions, you won't get an entry stamp in your passport. So if you take the UAE as an example, you would have an entry or exit report, something that's generated to be an official reflection of when you entered that host country. The fourth document, and perhaps the gateway document to DTA as a process, is then the tax residency certificate from that host country, which can indicate to SARS that you are tax resident in that country.
Good. So, so if I move overseas, if I move abroad, does it mean automatically that SARS can't tax my income, or is there, obviously that's part of the discussion today now?
So it doesn't happen automatically. So, the other way to perhaps put it is getting on a plane and leaving South Africa doesn't automatically change your tax residency status. So I try to think about it in the sense that for every person that transitions from a tax resident who's taxed on worldwide income to a non-tax resident and taxed only on income sourced in South Africa, there's a real knock-on effect to the SA fiscus. So there has to be a verification process, and a taxpayer certainly cannot resort to a self-assessment as to whether they qualify for DTA or not. And if you frame it in that context, it gives a better understanding as to why SARS requires certain documents so that they can verify if indeed you do qualify on that basis to update the status to non-resident as of an effective date.
Good. And how does SARS actually get the authority to be able to tax my income abroad? And I think that's just an interesting question. Who gives them the authority to do that?
So the authority is the legislation, it's the law itself. So when it comes to the South African taxation system, the definitions of resident together with gross income really underpins the principle of worldwide income being taxable.
Yeah, and I think one of the things just that I just want to mention as well, it's just the information sharing between countries, which have stepped up in the last couple of years. In the past, I mean, you could disappear overseas, nobody would even know where you are, anything like that. But at the moment, there's so much data that flows between countries, you can't hide anymore. They'll catch you. It doesn't matter where you are. So I think that obviously leads to my next question. So if I'm sitting abroad and I'm sitting in this tax situation now, is there a way that I can apply for DTA even if I'm overseas already?
You certainly can. So when it comes to tax residency as a determination is based on your fact pattern. So it's through the operation of law whether you qualify and on what date you qualified. So if you've been overseas for a couple of years and you have to embark on that factual inquiry of your facts and circumstances as of that arrival date, if you can get a tax residency certificate backdated to demonstrate to SARS, well, from my arrival, I was a tax resident in this host country, it could be that you could qualify as of that arrival date. Again, it depends on the so-called tiebreaker test provisions, but you can backdate it. It's not based on fiscal convenience, whether I've now ceased to be a tax resident, or based on when I've approached SARS. So only because I've approached SARS today and I do qualify for DTA, would it mean that today is the day I become a non-resident? No, it will be based on your facts and circumstances, depending on your wanderings and the purpose of you being overseas.
I remember specifically a case that I spoke to another accountant. He also does YouTube videos, and he mentioned that you guys helped him with one of his clients who moved to America, but they managed to backdate the whole process with something like about 4 or 5 years, and just by doing that, I think they saved him something like about R1 million in tax. So it's quite amazing that they actually do allow it for us to backdate the applications, which is really, I think, is a good thing. So I think, Delano, the next question that I want to ask is just about the exemption. If you look at expat tax, the guys had that 1.25 million rand exemption. Does those exemptions apply to DTAs as well, or do they work on a different system?
So we can say the short answer is no, because when you use the exemption, one of the requirements is that you need to be a tax resident in South Africa. And the tax benefit you would be receiving is that the exemption is capped up to 1.25 million rand. On the other hand, if you rely on a DTA successfully and SARS issues you with a notice confirming your non-resident tax status, you go back to the principle that a non-resident is only subject to tax on income sourced within the borders of South Africa. Anything you earn outside of South Africa, wherever it's sourced, would be non-taxable. And that's irrespective of whether you earn 500,000 per year, as an example, or 10 million. The principle underpinned is focused on your non-residency status.
It's good. I think next question, probably one of the last questions, say if I decide to go for this DTA route, does it mean that I'm bypassing the exit tax?
So when it comes to the exit tax, many people think that it only relates to, what has been referred to as financial immigration. But when it comes to applying a DTA, there's actually a deemed provision that is triggered the moment you update your status to a non-resident. And there could be an exit tax exposure in the form of capital gains tax. And simply put, the way it works is SARS would be interested in the day prior to your cessation date and do an analysis of whether you held certain capital assets. And what those capital assets then go through is a fictional sale. So it's not an actual sale of the capital assets. It's a fictional sale, which through a formula could dictate that you owe SARS based on your capital gains tax liability. But it also might be that if there's an annual exclusion applied, and depending on your assets and investments and where you are based on your own individual wealth, it could also mean that there is no exit tax exposure at all.
Good. Yeah, so I think in today's interview, we obviously answered or asked a lot of questions. You gave us a lot of answers. And I'm sure that I think one of the main purposes of doing this interview is just to create awareness, for people out there to say, listen, but guys, there is another option that you could consider if you're sitting overseas and you're working that side, you're not sure what to do with your tax in South Africa or the country where you're busy working with. So if somebody is busy watching this video now and they say, yo, but I need to ask a couple of more questions or see how certain things of this can apply to my unique situation, where can the guys get hold of you, Delano? If I want to make an appointment, you maybe want to share your contact details first?
Yes, absolutely. I think the main starting point would be the company website, Tax Consulting South Africa. We do have a link for double taxation agreement assistance. To get hold of myself and my team, my email address is delano@taxconsulting.co.za. Cell phone number 083 66 11 048.
Perfect. Yes, I think just in closing, I just really want to thank you once again for your time and just for your willingness just to share your expertise and just to give us some insights on this topic. I think it's something that there's not a lot of information out there, and I think a lot of people aren't aware even that these type of things exist. And I think, yeah, so I just want to commend you guys at Tax Consulting just for the wonderful work that you guys do, and just obviously just your consistency. I think that's probably the right word, because you guys are consistent in what you're doing and you always give the right advice to you at the right time. So I just want to commend you guys for that as well. Yeah, then I think just for everybody that's watching at the moment, remember to reach out to these guys. They're there for a purpose. They're there to help us. And yeah, just thanks for watching. Remember to give the video a like and remember to subscribe to the channel. Thanks for your time, Delano. Really appreciate it.